Oh, good news for very welcome. So if we look at that combined rate cut, we've seen 4 since the start of the year. What does that mean for a bondholder? How much have they saved since the year started?
Well, quite a sizable amount, and I thought let's just sort of illustrate this for someone that holds a 1 million rand bond on his home. And you'll see that in January, the interest rate or the prime lending rate sat at 9.75%. In that circumstance, you will be paying a monthly repayment of just under 9,500 rand. Now, you fast forward through all of those aggressive cuts that we've seen over the past 2 months with the Reserve Bank and flip the chart to today's 50 basis points cut, and you'll see what that actually works out to. That repo rate now shrinking, and the prime lending rate on a 1 million rand bond at 7.25%, will see that sitting at 7,903 rand per month. So that's a sizable saving, around about 1,500 rand if you are a bondholder, Sally.
I mean, that's fantastic. How much further can it go, and will it go? We've already seen the Reserve Bank acting very out of character, obviously trying to respond to these very unusual times. But the bank's also lowered its economic growth forecast.
You're quite right. I mean, this is very uncharacteristic of a Reserve Bank that was labelled to be very conservative in the past. So pretty much indeed, you know, the interest rate cut will go a long way. But at the end of the day, Sally, and the Reserve Bank governor has made this point, together with analysts, that economic, or rather interest rate cuts and monetary policy alone cannot change the fate of this economy. It might bring some relief, but what we need is structural reform. We need an environment that is conducive to investment, conducive to factories coming up and creating jobs for the long-term future of this economy. Now, the chief economist at Stanlib, Kevin Lings, puts it quite succinctly when he says that interest rate cuts alone can't change the fate of the economy. Let's take a listen.
Ultimately, we've still got to attract foreign investment. We're still very reliant on getting foreign money into South Africa. And it's clear that some of that money arrives in South Africa because we offer them a better interest rate than what they can get internationally. So from that perspective, we can't afford to be overly aggressive. I think the inflation rate allows for the cuts. I think the growth rate allows us to cut rates. It's possible the Reserve Bank will cut interest rates a little bit more. But I would say from the statement today and the way in which they made the decision, we're getting close to the bottom end of the rate cut for the moment, and I think it's appropriate.
That's Chief Economist at Stanlib there, Kevin Ling. So on the back of that interest rate cut, the rand has sharply gained against the US dollar following that decision. And again, the Reserve Bank cutting those interest rates by 50 basis points. The world markets, though, they've been largely down today, and they are concerned about hostilities between the biggest economies, the US and China, as President Donald Trump accuses President Xi Jinping of being behind a disinformation and propaganda attack on the US and Europe. And when these two large economies have a tiff, investors don't like it. So it shows in the numbers.